When it comes to supply and demand, we have four types of supply and demand. And the four types of supply and demand we have what we call, I think I should go down to another chart. Okay. We have rally based rally. We have what we call rally based rally. We have drop based drop. We have drop, sorry. We have drop based drop. We have rally based drop. Then we have drop based rally. Can you see all of these things? Hello? Okay. So we have we have the rally based rally. We have rally based rally. Here we have rally based rally. Here we have drop based drop. Drop based drop. Same thing goes for here. We have rally based drop. Rally based drop. We have drop based rally. Drop based rally. So these are the four types of supply and demand we have. So whenever you come to your chart, for example, when you see all of these what's it called, base, we take our trades off of all of our base. We always take our trade off of our base. So when you see a continuation and continuation, a continuous trend, a continuation trend, like when the market is in an uptrend, the market makes series of higher highs and higher lows, which is higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So all of these higher lows, the base, that's what we always look out for on marking out our supply and demand. Like on this rally base value, we definitely want to look out for this base. Why are we looking out for this base? Because this base was what caused the recent break of this structure. It caused the recent break of this structure right here. So we would want to consider this base as being our POI. So is so on this drop base drop, we'd always want to look out for our recent base that caused our base that caused a recent break of structure. We're always considering the base that caused the recent break of structure. It's like, sorry, the previous break of structure. The base that caused the previous break of structure. That's what we also would want to be looking at. So as to this one, these are base. These are base. Why are we choosing this base? Is because it caused the previous break of structure. Here's the break of structure. Here's the break of structure. So all of these things, what you want to be looking out for now on this particular is just for price to rally, 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 rally all the way, then drop. For price to rally all the way to the upside and drop. So so as to this one, continuation, continuation trend. We want to look out for price to rally, 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 tap on our base, then continue its movement. This one also, price to rally all the way to the upside, tap on the base, continuation to the downtrend. So as to so as to this, these are base. These are bays that caused the previous break of structure. These are bays that cause the previous break of structure. So what do we want to look out for price? We want to look out for pullback all the way, mitigate on our base, up it goes. So this is like the four types of supply and demand we have. We have the rally based rally. This is for a continuation trend. When a trend is going to the upside, you see a trending market going to the upside, making series of higher highs and higher lows, higher highs and higher lows. So what we'd always be looking out for is the base. We're always considering the base. We're always looking out for the base, not just the base that caused a previous break of structure. We always want to look out for the base that caused the previous break of structure, so as to a downtrending market. When the market is coming to the downside, for example, we always want to look out for the base that caused the previous break of structure. We always want to look out for the base that caused the previous break of structure. All right, ask a question. I can hear you. What's your question? If you can hear me, please ask your question. So whatever you are doing here on this rally based drop, this is like a reversal trend formation, which is like when you have those your smart money concept whereby you see that the market has pulled back all the way to the upside. The market went all the way to the upside, for example, went all the way to the upside, changed its character. We have like this break of structure here. Price went, price started rolling up, did another break of structure. So you know that all of these things are inducements. So this is actually the supply zone that caused this break of structure. This was the supply zone that caused this break of structure. So price will definitely come to clear all these inducements then all the way to the downside. So this is like this is like when a trend is going to the upside and makes series of series of bays at the top and cause a break of structure. So we know that the trend is actually wanting to pull back. The market is wanting to change this trend. So we're likely going to be looking out for possibilities on price getting to this base, which is this high, for a move for a continuation to the downside. So as to this one also. So as to this one also. So these are the four types of supply and demand we have in forex in the market. These are mainly the supply and demand that we traders actually use in confirmation of our trends or our continuation trends or our reversal trends in marking out our supply and demand zones. So
Okay.
you said you had a question. Please do also ask a question before I go on. Why does the market takes us out swing low before the continuation? Why does the market take out the swing low, which is the base, before the continuation? What swing low are you talking about?
Yes, I'm talking of the base. Majority of the time, the market just pick out the base, then keeps going to the
Okay,
continuation.
okay, okay. So there are different ways of identifying. There are different ways of identifying your POI, which is some people come into the market, they see multiple bays, which is like multiple supply or demand zones for them to take their trade off of, but they end up taking their trade off of the wrong supply or demand zones. Like we said, supply and demand zones are key levels where price is likely going to reverse from their like advanced support and resistance. So in answering your question, Why do price take out base before keep going to the upside? It's because your base is not properly identified. The reason why a market keeps taking out your base before going to your anticipated direction is your base is not properly identified. Maybe that wasn't actually the key supply or demand zone you marked. Because there are times where market will definitely do something like this. Uptrend, market will definitely do something like this. Market will definitely do something like this. And there are some traders that actually, let's see, in a case scenario like this, there are traders. Okay, so how do I identify right there? The right bit. Okay, in a case scenario like this, there are some traders that will definitely come to this particular area, mark out their base off of this particular area, based off of the fact that price has already broken structure here. Based off of the fact that there's a break of structure here. All of these things are internal break of structure. We want to look out for the key levels, the overall trend. So some traders will definitely want the market to pull back all the way to this area. So when the market pulls back all the way to this area, the market starts going to the upside, then comes back down, take them out before mitigating properly all the way to the upside. The market mitigates properly into this base all the way to the upside. Why did the market do that? This particular base wasn't the right base. This particular low, it wasn't the right base for the market to mitigate before going to the upside. So this particular low serves as an inducement. This particular low then serves as an inducement before the original demand zone. So price does this particular thing often enough. I'll show you in the real chart. So price does this particular thing often enough. Does this particular thing. Let me take you to, let's go down to a good chart, for example. Okay. Okay, this is on a continuation trend. Okay, fine. Okay, yeah. We have we have a continuation trend here. Can actually see that Euro GBP is on
Yes, sir.
Euro GBP is coming to the downside. So we have this massive break of structure here. So we are seeing this break of structure here. Price has broken the structure. So what was the what was it called? The base that actually caused this particular break of structure was this base. It's clear. It's very clear. This particular base here was what caused this break of structure. If you notice, price was coming to the downside, going to the upside, lower low, lower high, lower low, higher high. From here, price tanked all the way to the downside and caused this break of structure. So this was the base that caused this previous break of structure. So we want to look out for this particular base. We want to look out for this particular base. And why? First, confluence, because it caused a break of structure. Secondly,
Yeah.
this particular base, judging from analysis, so this is me doing analysis now. This particular base took this high.
Yes, sir.
I'll say that this particular base took this high. So I'll flag it. This particular base took this particular high. And here there was an inducement before the zone. There was an inducement before the other block here, which is like the supply zone here. So how did I know? When I put out my Fibonacci retracement tool, from here all the way to this particular area, you see my level, which is my golden level, 90.50. Can you see it?
Yes, sir. I can see it.
Okay, this my golden level right here, which is like 90.50. You can see it. That was why I drew this line.
Yes.
Support and resistance traders would definitely want to sell from this particular point, this particular eye, but this is actually an inducement before this zone. This serves as an
Okay.
inducement before the zone. So support and resistance trader would think that okay, price is definitely going to fall from here. So they start selling from here. Immediately they start selling, price went to the upside, kick their stop loss, mitigated on the level. Like if you see my level, the level of my
Yes.
Fibonacci retracement, so you can see it's a key level I mark.
Yes.
I mark the level and maybe your stop loss, extend your stop loss a little bit, like 10 pips. You can see the sniper entry on this particular trade. First take profit will be around this area. First take profit will be around this area. Then second take profit will definitely be around this area. So this is me analyzing my chart. This is me analyzing, knowing what the market is actually doing. So it's best for you to always know the trend of the market. Let's go down to another chart. Can you hear me? Okay, this is another chart, and clearly you can actually see that this market has been ranging all the way to the downside, making series of higher highs, sorry, making series of lower lows and lower high, lower low and lower high. This is it. Lower low, lower high, lower low, lower high, lower low. So judging from what we said earlier, this is our base. These are our base across this break of structure. These are our base across the previous break of structure. This break of structure right here. So this is our base. What do we do concerning this base? What do I do concerning this base? If I want to make my analysis, after identifying the trend of the market, I've identified the base. I put on my Fibonacci retracement zone. I put on my Fibonacci retracement zone. Here's my golden level, which is like 90.50. 90.50. I would definitely want to wait for market to reverse all the way to that area. What is that? I'm willing to sell from this particular area. Stop loss right above, maybe extending the stop loss a little bit. First take profits this area, second take profits all the way to this area. You can see the sniper entry. You can see the sniper entry on this trade. So knowing your knowing your base, your trend of the market, and knowing how to identify your base, your solid base. The base is always at the origin, which is like the origin, the movement that actually caused all of the break of structure, the movements that actually caused the break of structure. So the market, if you can see this very well, the market has been ranging to the downside, making series of lower lows, lower high, lower lows, lower high. So this was actually the base. There's a base here, and if you can see very well, it's very clear. Price did like a buy side liquidity sweep here. Price did a buy side liquidity sweep, swept this particular liquidity, came all the way to the downside, broke all the structures and everything. So I'm willing to take myself from this particular area after plotting out my Fibonacci retracement too. So it's very, very simple to always know where to identify your base. It's always know when to identify your base. Always know when to identify your base. Always, all the time. Come, let me see if I can get another. Let's see if I can actually get another chart. Okay, let's look at BTUSD for example. Yes, Bitcoin. Yes, Bitcoin. And we can actually see it's very obvious that Bitcoin is in an uptrend, for example. Sorry, not for example. Bitcoin is in an uptrend. So it's very obvious that price is a break of structure here. It's very obvious that price is a break of structure here. And what caused the break of structure? This was the low. So I'm going to mark out my Fibonacci retracement. So after knowing the trend of the market, knowing that there's a previous break of structure there, I'm going to mark out my Fibonacci retracement now. So this is my Fibonacci retracement tool. So this is my Fibonacci retracement tool, and here's my level. Here's my 90.50 level. What did the market do? The market came all the way to the downside. The market swept this inducement. All of these are liquidities. Even this my level right now serves as an inducement, which is like a liquidity. All of these things are liquidities, but I'm just giving you a practical example because if I was to take this trade, I wouldn't have taken this trade because all of these weak rejections, all of these things are liquidities. But I'm just giving you like a practical example of how to spot out your or how to take a trade off of your supply zone off of your supply zone or your demand zone, the right zones or the right base for you to take your trade off of, how to spot out all of those trades, all of those zones. Stop loss below. You first take profit all the way to this area. So you can actually see the sniper entry on this particular trade. So it's good to always know, it's good to always watch out for your trend of the market, possible break of structure, which is like the recent break of structure, plotting out to Fibonacci. This is this is personally my Fibonacci settings, Fibonacci retracement tool, the settings I always use to catch my trade. I did my findings about this particular level. I was always doing my findings. So I stumbled upon knowing all of these levels and everything. So this was how I was able to just get my Fibonacci retracement settings to always catch my trades. So this is like a reality of how to mark out all of these things. It's very simple. You just have to know where the trend of the market is going to. Once you know the trend of the market, things becomes very, very easy. Very easy. Once you know the trend of the market, also this one also. I think okay. Let me use this as an example. So you can possibly see that this market is in a downtrend. It's very clear. And we have a break of structure here. We have a break of structure here. Fibonacci retracement to when I put my Fibonacci retracement to here's my level, here's my golden level. I mark my level. Here's my level, break of structure. Here's an inducement. Here's an inducement. I always watch out for inducement before taking my trade. Here's an inducement. So I take my trade off of this level. Sniper entry. Maybe stop loss above this high. Because I want the trade to be very safe. Take profits this low. So this is just the basic principle on marking out your base, which is like your supply or demand level in the forex market. This is like the basics, how to do it without stress, without trying to plot out so many things on your chart. Just know the trend of the market. If your trend of the market is in a continuation trend or you're anticipating the reversal, just know the trend of the market. Look for a previous break of structure. Always look out for inducement for the supply zone, then plot out your Fibonacci retracement. So it will clearly show you the point at which the market would want to reverse, and it's always a sniper entry. So this is how I do this is how I do what I do in the forex market. So please, if you have any question, you can actually ask. I think I've come to the end of this section. Do you have any question, please? I can hear you. Sorry, I cannot hear you. I'm finding it hard to hear you. I can't hear you.
Okay.
Okay, so what will happen is, what's going to happen is, I think I recorded this section. So after this section, I'll send the recording down to you, and I'll let you ask your question off of Telegram. You just send me your questions on Telegram, and I would
Okay,
answer all the questions.
okay, sir.
All right. So thank you very much for attending to this section. We'll continue in our subsequent classes. Stay blessed.